What's up, everybody? Welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside Dino here. We're pretty excited to show off what's been going on with the metrics this week on the Santiment platform. As many of you know, it's been a bit of a down week, and by a bit, I mean fairly substantially. We've been seeing some pretty interesting stuff happening on chain wise and social wise to an extent. But as I usually like to start off, I want to remind everyone that we are giving 2-week trials anytime you want to sign up. So head on over to santiment.net and make an account. And when you do, you will instantly see that you have all of the charts and metrics to our platform unlocked for the next 14 days. During that time, make sure you check out as much as you'd like, ask us questions, join our Discord, which is available in the link on our Twitter. Make sure you're following us on Twitter by that respect, and we will be more than happy to help show off the kinds of metrics and charts that we're going to dig into today. As I like to start off most calls, I am beginning by showing off our Santiment screener. To get here, you simply highlight the screener header here, head to my screener or a custom one such as all Santiment projects like I've made. It's public, so you should be able to find it yourself. And what it does is essentially show you what's been happening over the last 24 hours, 7 days. You can look at the last 1 hour on its own, where we can see a rebound. And the options are pretty much endless, in my opinion, when it comes to what you can do. You can go to a filter here, and you can actually click on volume, social volume, development activity, and have a criteria for the types of projects that meet that top end or vice versa, the bottom end of what you're looking for to identify the types of projects that'll suit best for your trading strategies. So as we're looking at now, we have the last 7 days highlighted to give us an idea of the context of where assets in the top 100 have been heading. Obviously, they've been not so great. Bitcoin down just about 6%, 5.6% to be exact. Many altcoins, the majority of them were well below that, which is often the case for those who are just getting into trading. As a rule of thumb, here in 2020 still, which has been the case since the beginning of crypto, most altcoins are still going to fluctuate based on the health of Bitcoin. So when Bitcoin drops, most other projects will drop along with it, often much more so. So this last week was a pretty textbook example of that. We had just about 5, 6, 7, 8, 12, 15 of the top 100 projects were in the green. So 85% dropping this week. We had major bleeders such as OMG, we had Ampleforth, we had Ocean, we had Thorchain, and a few others that I won't name here, but essentially the top or so, I'd say, well, I guess the top 3 or 4 projects, maybe 5, they weren't hurt as much. But if you go down the line here, you'll really see some major double-digit loss percentage projects here. And this is something that you look for as an opportunity if you think that Bitcoin is going to rebound, because if Bitcoin's going to stop here at about 17.7, 17.8 and start to reverse back upward, that's when these projects, the ones that have been bleeding the most, tend to make up the most ground. But the big question we try to answer on these calls is it going to bounce? Is the current momentum going to continue, or are we going to see a quick reversal back up and another attempt at an all-time high? That's the big question. So we can also see here, if we scroll down, we can look at the market cap over the last 7 days overall for all projects. We dropped 5.3%, which is quite significant. That's a whole lot of money when you calculate what that percentage is by this 537 trillion market cap that we have. So volume-wise, it's even worse. As the prices have dropped, it appears that traders have kind of froze up a little bit, and they don't know whether to make this into an opportunity or a fearful type of event. Therefore, we have about a 17.8% drop in volume compared to what the norm has been. So I find this pretty interesting, and we're going to have to really watch carefully how things go, and we'll look at some models now to give us some indication as to what we think is going to come next. So one of my favorites, one of the models that we put together pretty recently here on Santiment is our MVRV Opportunity and Danger Zone Divergence Model here. And what this does is it is looking at all of the average trade returns over various periods of time and gives some context as to whether historically we're in a position where the average traders are bleeding enough where it's a great opportunity to buy, or whether they're succeeding enough where it's still a fearful, not so great sort of overbought time in the markets where it's on average a better time to stay away. If we were to look at this even a week ago, especially 2 weeks ago, we would see that Bitcoin here, where it says semi-overbought, it was right near this danger zone. And what the danger zone means is it's the 10% highest return time overall when it comes to the average trader returns over a one day, 7 day, 30-day, 90-day, 6 month, and 1 year period, all averaged together in a little algorithm to give you uh, an idea that it's in the very top 10% area. So that would be bad, right? And that's exactly how it was looking when we were above 19K, even in the high 18Ks. We were in pretty red territory here. Vice versa, most altcoins were around neutral, sort of like what we're seeing now with like Litecoin and Maker. They were all in this little yellow area, symbolizing they're about exactly where the normal average trader returns are. A lot of people think when Bitcoin goes up to 19K, everybody is profiting, and you have um, major returns everywhere. That isn't always the case, and even though we have dropped down to the high 17Ks, that's almost neutralized this line because there was so much FOMO above 18K that a lot of people were kind of bull trapped, and as they bought more as the price was rising, um, they ended up getting a little bit burned after the drop over the past week, and that's why we're starting to see these neutral lines that we're seeing now. That being said, semi-overbought here still implies that there is a bit more profit than we'd like to see to imply that it's a good time to buy into the markets. So Bitcoin obviously is the one to look at the most. And when this is under the black line here, that means it is a uh, less than average prime opportunity to enter the markets when it comes to anything here. Ethereum looking about the same, actually a little bit worse, which is interesting, but it makes sense because Ethereum's dropped just a little bit more than Bitcoin over the past week, and overall Bitcoin over the past couple months was the one that kind of had the most attention and the most profit. So everything is still kind of circulating around it, as I explained earlier. And then we have a few opportunities here that are in the green, Elfcoin and OMG. We don't have this metric for everything. I had to pick around 20 to 25 projects to really make this model for, mostly because it's only available for ERC20 coins, ETH-based coins. And if I put out the top 100 like I did for the screener, this chart would just be too squashed and unmeaningful. So this is what we have right now. But if you do have a pro account, you can download this template and add any other projects that you want to look at because you have an API. So you can go to add-ons, Sandsheets, and add your API key there and pull any data you'd like from the Santiment API. So overall, the story that I see here is that altcoins look to have an opportunity right now. Most altcoins are in the light green to dark green, implying they are bullish, and on average, traders have been bleeding quite a bit. That being said, it always comes at a risk when you see that Bitcoin is semi-overbought because all roads lead through Bitcoin, and if Bitcoin continues to drop, altcoins will too. But if altcoins do drop more, that's when the greens will all start to get toward this really high opportunity zone. And if it crosses this dashed line, it's almost a certainty And I say almost because obviously you want to trade at your own risk. None of this is investment advice. This is all objective data that's coming from historical context, right? So just keep that in mind, and you might find there to be some tremendous use out of a model like this.
Hey, Brian, while you're on the MVRV indicator, if you want to go directly into Bitcoin's project page on Sandbase and show several different MVRVs, the reason why it's still sort of overbought is mostly because of the long-term holders, which
Yeah,
are
let me
still
show it.
kind of. Mm-hmm.
I can show it right here, actually.
Oh, good.
So this tab has exactly what Dino's describing. It basically is just showing the 1-day return, which is just plus 0.5%, 7 days negative 2.8, 30 days negative 1.6, and then look at these three MVRVs that Dino is referencing that are still way, way, way up high. The 90-day is about plus 15%. 6 month is plus 26%, and 1 year is plus 42%. So these are massive returns still that we see on average for Bitcoin traders. And generally, every MVRV, no matter what the time frame is going to hover around 0% historically. So like I was saying earlier, when Bitcoin's hitting all-time high or close to it ranges, of course the average returns are going to be a little higher than usual, but it doesn't mean that everyone in the market is profiting. There are people shorting. There are people who are FOMOing at the wrong times and FUDing at the wrong times, causing their returns to still be around zero or in the negative, even if Bitcoin is going up more and more over time as we zoom out over the last decade. So really interesting there, and you'll see kind of the same trend almost identically. So it's pretty eerie how similar it is for Bitcoin and Ethereum.
Yeah, and
But
it's but the good thing is though that I mean, good. I published this as a thumbnail as well. The short-term holders are currently in a fair bit of pain. So anybody that's bought in the last 30 days or so, they're on average now below break even on their investment. So for those unfamiliar with how MVR works in general, the lower the MVRV, the more undervalued a coin is, right? Now, obviously, you can't really just look at the returns of short-term or only the returns of long-term holders. It's the dynamic of both of those types of investors that is important to understand where we are in the cycle. At the moment, short-term holders are experiencing a little bit of pain. They're still about like what -2% of their initial investment. That being said, at these levels of unrealized losses, I am assuming that not a lot of short-term holders are necessarily looking to sell, right? Why would you sell at about -2%? Unless you're obviously completely bearish about the market and just want to capitulate and get out while you can. On the other hand, however, long-term holders are still very much in profit. For Bitcoin, it's about plus 42, was it percent for the 365-day MVRV ratio. This is still, however, while high, it's not the highest we've seen this year. So if you, Brian, go to Bitcoin's project page and you look at the time series data for the 1-year MVRV ratio, you'll see that we've gone to, I think, as high as plus 88% in terms of the unclaimed or unrealized profits by long-term Bitcoin traders. So while their relative unrealized profits have declined in the past 30 days, they are still high, right? So ideally, when you are examining a potential for bounce back or for a price recovery, you would want all of these MVRVs, both long-term and short-term MVRVs, to be low and into the negative, because that would point to a significant amount of market-wide pain and a relatively low incentive to sell, because a lot of people would be underwater. For long-term holders, it seems like these are the guys that are currently controlling the market. Short-term and swing traders are at about a break-even point, which means they're probably not going to be selling off all that much. It's going to come down to how confident these long-term holders are in the upcoming price potential for BTC. They're about about 40% up on their initial investment. We have seen them in the past, in the very recent past, hold and stay kind of patient with their bags, wait for the price to rise once again to accumulate a bit more and to sell at about plus 80% to start taking profits then. So it's going to be coming down to their own behavior in the next couple of weeks. Are they confident enough that Bitcoin is going to bounce back, and therefore are not going to be, exerting increased sell side pressure? If they become less confident, like we see, especially in terms of social data, as far as both Bitcoin and Ethereum is concerned, we are seeing sort of a pivot towards more bearish sentiment. We might be seeing a rising sell side pressure come from this particular group of traders, which could push the price even further down.
Yeah, solid explanation, Dino. And as we can see here over the last 6 months, there's been quite a fluctuation. But even if I go all the way down to the very bottom here in June, you can see that the MVRV for the last year was still in the positive. So going back to June of 2019, when people started their investments, people were still up come June 2020 by just a hair at 2.5%. And that means that right here, things could have broken either way. This is back when it was completely neutral on the 1-year MVRV. And over the last 6 months, it's just grown and grown and grown and got up to a peak of about 63%. So now we're about plus 42%. And this metric alone is still going to be bearish until it actually gets back to 0% or below. So interesting stuff there. Okay, quick recap on daily active addresses. Bitcoin has been mostly treading water in terms of its address activity. The amount of unique addresses that are transacting on a day-to-day basis has been fairly bearish for a long time, ever since we got past the 11K point here in early October. The price has grown without much follow from the daily active address side, and that's concerning. And as we can see, we had some pretty all-time low bearish signals that were a result of it. As the prices drop, though, we're starting to get a little more reasonable, still well into the bearish territory here, but we're at least seeing that daily active addresses aren't falling off a cliff, which is why this bar is starting to get a little lower, or higher, I should say, and closer to 0% here. And that's what you want to see. You want to start seeing these green bars again. So not much to say here other than the fact that we're still quite bearish in terms of DAA divergence. We can look at Ethereum and it's essentially the same thing. We are back at almost, if we get up above this this first dashed line, it will mean that we're mostly back to at least neutral bearish, which means that the price can start to tick up. As you can see, when prices really rose here, the neutral bearish, and especially, of course, when we had a couple days of bullishness, that's when it implied that we were going to be able to climb. But once we get into bright red territory, that almost always implies that a peak is coming here, right? August 13th, September 1st, all of these days in late November, December, these were all local tops that occurred when we were in bright red territory. And that's going to be the case for any of these projects that we look at down here. So
Ethereum's, sorry for butchering in, Brian. Ethereum's daily active addresses seem pretty concerning to me, even more than Bitcoin. So if you, for example, if you look at Bitcoin's DAA, or daily active addresses, over the last month, they've kind of been fluctuating about 1 million. It's mostly the price that has kind of skewed the DAA divergence model in one way or another. But at the very least, Bitcoin's daily active addresses have kind of stayed in a general vicinity of where they started at when the rally started. So 1.101, 1.17, I think, was the highest. So that's sort of the level that we've seen. However, if you look at Ethereum, and especially, Brian, if you look at the active addresses 24 hours, so the rolling 24-hour daily active addresses for Ethereum, they've dipped to as low as 370,000, which I think was like a 40-day low. Right now, in fact, is like a 40-day low for Ethereum. So while Bitcoin's daily active addresses are somewhat remaining stable, at least, Ethereum has seen a reduced amount of interest in people interacting with their network. Now, this is at least, there's a multi-layered answer to why this is. I think at least partially this is because of the fees, which are still fairly high. I think This today is the first day that the average fees on Ethereum are below $2 for the entire week. So anything above $2, I think it's going to price out a lot of small return interactions still. So with the fees still being a fairly problematic factor in Ethereum scalability, it's not surprising to see the amount of on-chain activity continue to drop. It is, however, problematic. Sustained price rallies usually require sustained rise in network activity because it points to increased interest in investor activity. It points to increased speculative demand. It's not what we're seeing, especially for Ethereum over the last 2 weeks, really. So while some metrics are pointing to an upward trend, some metrics are remaining bearish. This one in particular, I think, is fairly concerning, to say the least.
Yeah, absolutely. And I really love this chart too. It's a good suggestion to look at this 24-hour active address chart because you can clearly see when the bearish and bullish divergences occurred. Right here, for example, going back in late August, you've got this huge dip down here, followed by a big rise. And that's a telltale sign that it's a bearish sort of contradiction, a price divergence that is showing that the price should not be rising as much as it is based on the address activity, which had just fallen off a cliff 2 days before it, right?
Yeah,
So
and it's actually been declining for a month, right? If you look at where we were, it was really August 1st that the amount of activity on the Ethereum network has peaked. And then we were pretty much in a month-long decline in terms of daily active addresses before we encountered a market-wide pullback on September 1st. So it's kind of a repeating pattern, a deja vu of what we're seeing right now. Not ideal, but so far Ethereum and Bitcoin have been able to kind of resist the lack of on-chain activity relative to their price action. However, with the latest market-wide pullback, I think this is finally starting to get priced in a little bit.
Yeah, I would agree. Okay. Next up, I'm going to skip NVT for the day. All I'll say about NVT is that token circulation is looking decent. Bitcoin, it's about where it should be based on the market cap, if not slightly better than average. Ethereum, even better. It's actually looking still in the bullish territory. So if you are, for as bearish as we are with the address activity, we are actually neutral or slightly encouraged when it comes to the amount of token circulation happening in the markets, which is the unique amount of tokens transacting from one address to another, excluding things like wash trading. But what I will show is Bitcoin's holder distribution. What this is showing is the amount of total addresses within a specific amount of tokens held. So for example, we can look here at the red and yellow bars, which have increasingly rose over the last 6 months. And the yellow one in particular is very interesting because this is showing the amount of holders who have 1,000 to anything above that in terms of tokens in their wallet. So 1,000 to infinity. And it recently hit an all-time high back on November 24th. And since then, it kind of pulled back and has fluctuated a little bit. There's quite a bit of people with at least 1,000 tokens, so it's kind of tricky to navigate just how significant this is. But we've kind of stayed in neutral territory, which is good. We haven't seen a big drop off like we would see here, right? When the price dropped in late August and early September, this is when the whales essentially were letting go of their tokens. And then you would see like a rise in like the red and pink lines, for example. So overall, nothing scary here that I'm seeing because of the fact that the two lines here, the yellow and red, signifying the two tiers with the highest amount of tokens in their wallets, they aren't really dropping off. In fact, if you were watching back in mid-November when we had this big rise, or even mid-October, these two rises symbolize that whales were accumulating. And that's something you really want to look for as justification that price can continue to go in the trend that it is. And I'm not too concerned based on this fact alone because whales are staying strong here. Also, I want to look at the coin supply on exchanges. Now, this is something I've really been digging into more and more in the previous weeks. What we're seeing here with the pink and tan area charts here is the Bitcoin percent of supply on exchanges in tan and the Tether supply on exchanges in pink. And generally, the lower they are, the better and more bullish, right? So with Bitcoin supply, we just saw a big drop in coins that are on exchanges. And that's a very encouraging sign and a good thing that tells us that we aren't going to see too much of a continued sell off. Now, we started to see signs of coins moving back onto exchanges in mid November around the 16th. And we saw it go from about 3.74% all the way up to a top of 3.94%, which is 0.2% is a pretty significant percent of supply when you really do the math and realize how much in USD that is. After it peaked here, notice how the price peaked right as the percent of supply peaked, and then it started to drop off. And it kind of ranged for a while before this big drop off happened. And this is actually the biggest single day drop that I've seen. It was even further than this. So I can't even see a single drop that was bigger. Maybe around here in mid-October, it's very close. But either way, a single day drop of 3.86 to 3.7. So that's an 0.16% drop from supply that was sitting on exchanges. That's a big one, and it tells me that people are going to be okay holding their assets through this volatility that we're seeing, and it's a sign that we may not drop off, down to these 15K and below numbers that you might be seeing on Twitter and other social platforms right now. I also like to look at Tether as a comparison to Bitcoin. Both are generally a good thing when the supply is being reduced on exchanges. Tether's a bit more on the neutral end. It's kind of hovered between the 13 to 15% range for most of the past week or so. If we start to see Tether drop off the way Bitcoin has in terms of supply, that's an extremely good sign that we aren't going to drop off much further, and we may actually just turn back around and head back to 18K and above. So you can look at this kind of metric for Bitcoin, Ripple, Litecoin, Binance Coin, and then any ETH-based project, including Ethereum, of course, to get an idea. And I do want to show Ethereum as well because I think it's great info. Where did I have that? Way over here. So here's Ethereum, and we're kind of seeing the same thing. Ethereum actually just hit an all-time low in terms of supply on exchanges, and that is a great sign. Obviously, keep it in isolation and don't use this as the only metric to decide whether it's time to buy or sell. But from this metric alone, it's looking quite bullish in terms of the amount of tokens that are moving off of exchanges and into hard wallets for safekeeping, implying that holders are in it for the long term, not ready to have another huge sell-off, and being down here at 13.27% compared to where it was, at the peak of these last 6 months, which was 16.65% in June. That's a great sign. A 3% drop in supply is a massive drop, and that's showing that people are okay keeping their wallets, their coins on offline wallets. One thing I want to point out with Ethereum is that there is going to be a little bit of skewness in the data due to the fact that a lot of these top end addresses have been converted to ETH2, and that's going to give a little bit of I wouldn't say a false story, but a more of an incomplete data story here right now that has to be taken with a grain of salt. But DAI, for example, which is more connected to Ethereum's price, just like Tether is for Bitcoin, DAI's supply kind of bottomed here at on the 26th and has risen up just slightly over the last 2 weeks or so. So it isn't quite on the same trajectory as Ethereum. And ultimately, it's going to be the most bullish when both of these are continuing to move down here. So keep that in mind.
Brian, just one correction. It's not an all-time low in the supply and exchanges for Ethereum, but it is like a yearly low. So it's, I think, the lowest since July 25th, 2019. So it's about year and a half that before we've seen these sort of low levels of Ethereum supply and exchanges, but not yet the all-time low. We went to quite lower in 2018 as well.
You're absolutely right, and thank you for that correction. It does look like it was a 2-year low, but I apologize for saying it was an all-time low, because if you go back to right around November 2018, just a little past the 2-year mark, it looks like that's when it went way, way, way lower. So keep that in mind. 2-year low, not an all-time low here, but still encouraging. Anytime you see a 2-year low or 2-year high in anything that's bullish, generally a good sign. Last thing I'll talk about is Bitcoin social sentiment. We saw a dip into negative territory on Twitter. What this is measuring is basically the amount of discussion related to Bitcoin on Twitter multiplied by the ratio of positive versus negative commentary. The more positive and abundant the commentary is, the more this bar is going to go up. The more or the less it's being discussed and the more bearish the narrative is, the more it's going to go under this mark. The black line, of course, would be the historic average based on what we've seen over time. So the fact that we have gone from here in mid to late November all the way down to here means that the narrative has essentially flipped, and Bitcoin's crowd now feels that it is not a good asset to be invested in overall on average. And that's a big deal, because historically, when we see things lower than average in this negative 0.7 range especially, that's when we tend to get our local bottoms, right? We saw a local bottom here in July. We saw a local bottom here in late September, early October, and that tends to be the case over time. Now, we're still mostly neutral, but the fact that we've now crossed into negative territory can be considered a bullish event, because the crowd, which is historically wrong about prices overall, now believes that we're going down. Just like when they believe we're going way up, that tends to be when tops hit. So we'd be looking closely at this weighted social sentiment sort of crossing the negative 0.5 area as an indication that a local bottom can occur. Now, it could just shoot right back up if Bitcoin, pops back over 18K and everyone starts to become euphoric and encouraged that we could hit an all-time high again. But for now, consider this a very mild opportunity, because of the fact that the crowd has now converted from very, very euphoric here just 3 weeks ago to now just a little bit concerned. All right, I'm going to stop my segment here. I may chime back in toward the end of the call, but I want to hand it off to Dino, and I'll chat with you guys a little more at the end.
Thanks, Brian. I'm not going to take too much time, because I want to get to questions and suggestions about which coins that we should take a look into. I've seen REN already being requested. I've already seen some very interesting metrics for REN recently. I even wrote about them. So definitely we'll take a look at that. Guys, anything else that you want us to look into before we end the call in about 10 to 15 minutes, let us know. And we'll get to that. I mean, we'll get to it in about 10 to 15 minutes. So the thing that I wanted to discuss is mostly having to do about Ethereum and altcoins, and how we kind of predicted, I don't want to say cold, but definitely we're on point about this particular bounce back for both Ethereum and the general market. So on December 9th here, you can't really see it because I'm behind Brian here, but we wrote an insight saying Ethereum pulls back, here's what to look for. So we wrote it around here. So Ethereum was around here. And one of the things that I noted in this insight, Gary, if you want to link to it in chat so people can read it and see for themselves, is that there have been certain signs of rising FUD in Ethereum's on-chain data, which might help Ethereum bounce back in the short term, which obviously happened in the next 24 hours. Now, when I was talking about this particular sort of rise in FUD, the main thing that I was referring to is the amount of Ethereum moving to exchanges. So I'm going to now share this chart live so you can see exactly what I mean. You go to exchanges, exchange inflow for Ethereum, and what you see is this notable spike in Ethereum's exchange inflow. So this is about the time, as you can see here, when I was writing the insight. This pointed to a rising sell-side pressure for the second largest cryptocurrency. And then later on, I'll show that this wasn't an isolated event. It actually happened across the altcoin ecosystem. There's been, I found, at least 12 different coins that had a very similar spike in their respective exchange inflow, pointing to the fact that overall the market was pretty fearful about the altcoin's short-term potential. And especially like if you compare this spike in exchange inflow, maybe it's even better to compare live. If you compare this spike to this one, the latest or the previous market-wide pullback, you can kind of see that here the market was still fairly confident about both Bitcoin and Ethereum and the market-wide bounce back. It did happen, but it was definitely sort of an overvalued or sort of super bullish sentiment still. People were convinced that we are going to bounce back. There was a lot of buying the dip. And in fact, it has kind of become a self-fulfilling prophecy. This time around, however, or at this particular pullback, we have seen much more in terms of uncertainty from investors. We have seen investors not really hold on to their bags, but rather start to cash out and take some profits because they were concerned about Ethereum's and altcoins' short potential. Now, like I mentioned in this insight, Ethereum exchange inflow and generally exchange inflow is a very interesting metric because you will see it spike both during local tops and sometimes during local bottoms as well. What's the difference? So I mentioned here this type of rise in exchange bound activity has a tendency to signal short-term accumulation and we can exit this. And I mentioned this, that as a result, we often see people cashing out in mass during local bottoms, provided there's enough bulls willing to buy the dip. So my conclusion was that a rising sell-side pressure, especially when paired with other bottom or trend reversal markers, could make a local bottom. And like I said, this is what happened. So the difference between this spike in exchange inflow, which kind of, for example, this one, which both kind of pointed to a short-term correction, to this and this spike in exchange inflow, both of which kind of occurred at local bottoms, is simply in the market-wide momentum. So when we see a rise in exchange inflow, especially during this massive sort of market-wide rally, what you're seeing is a rising sell-side pressure into a pump. So in order for bulls to absorb this rising sell-side pressure, they need to be super confident in the coin's short-term potential or even mid-term potential, but they would be essentially agreeing with buying at a very high premium. So, would you just consider yourself, would you be okay with buying Ethereum at 612 when, a month ago it was what, 450 or something? They need to be super bullish about the coin's short-term potential in order to gamble on this kind of investment. And that's why you will often see short-term spikes in exchange inflow during a rally coincide with local tops. However, when the market is in a full-on panic sell-off mode, we see a wholesale pullback. These types of exchange inflow spikes are much more easier for bulls to absorb. So anyone that's if there's enough bullish sentiment still in the market, if there's enough people looking to buy the dip, stock up on some Ethereum at a discount compared to its monthly action, then these types of exchange inflow spikes are more likely to be rejected. And this is what happened in this case for Ethereum and a lot of different altcoins as well. So it wasn't just the spike in Ethereum's exchange inflow that pointed to a short-term bottom forming. It was also a spike, relatively low, but still a notable spike in H consumed. So H consumed, for those unfamiliar, simply tracks the amount of Ethereum, a renewed activity of Ethereum that have previously been dormant or idle. So when you see a spike in Ethereum's H consumed or any coin's H consumed, it essentially means that a substantial amount of previously dormant coins that have not moved from their addresses for quite a while, are now once again starting to move on the blockchain. And in general, these spikes in H consumed tend to coincide with short-term trend reversals. H consumed isn't really a top or a bottom indicator. Rather, it's a volatility marker. And that's why you'll see it spike not just during the local bottoms, but also during local tops as well, like here and like here before a correction. So the reason why age consumed usually is a sign of a local, of a sort of direction a move or a trend reversal, is the fact that long-term holders rarely make rash decisions in the market. They tend to execute their trades based on either intimate market knowledge or just extensive market analysis. And that's why you'll often see them making moves when they're confident of an upcoming market volatility. So the fact that we have seen sort of a cluster of age consumed spikes form around this local bottom as well, combined with a relatively high exchange inflow for Ethereum, has pointed to a forming bottom for me. And so far it seems to have been the case. And I point to here to several different examples when we've seen exchange inflow spike during local bottoms. So you can see it here for IFI, where we saw a massive sort of sell side pressure increase at IFI's. I think this was like a 3-month low in price just before a a very strong bounce back in terms of IFI's market cap. We have seen a very similar thing for Dego, where both here and here we have seen spikes in exchange inflow during local bottoms, as well as for REN. I'll show more data for REN as well, but you have seen several spikes like this one, as well as this one, pointing to rising sell side pressure during a downtrend, which provided there's enough bull support and people looking to buy the dip, could be construed as a relatively optimistic sign. So this was something that, there's more to this analysis. If you would like to kind of catch up on everything that I wrote here, I think Gary has already shared the link in the description or in chat, so be sure to check it out. So one last thing that I will point out, like I mentioned already, is that this was not an isolated case. So about 24 hours later, I wrote an addendum to this post, pointing to the fact that it wasn't just Ethereum that saw a spike in exchange inflow and a rise in sell side pressure, basically pointing to a lot of FUD by Ethereum's investors. So here I point to 12 different examples of coins that have had a relatively high spike in exchange inflow, suggesting or implying that there was a market-wide effort to sell up some of their bags, at least in the short term, because they were concerned about the market's overall health and short-term potential. So this is Basic Attention Token, Engine, 0x, and Mana, all of which kind of had a relatively high inflow of their respective coins to exchange wallets. This is Link, pretty significant. This is REN, once again, very significant. Uniswap, similarly, Gnosis, and then finally we have Synthetics and IFI as well. All of these coins had, at least relative to their previous 7-day average, had a massive spike in exchange inflow or in the amount of coins moving to exchanges. A lot of people were looking to sell. So, if we see sustained spikes in exchange inflow, this could prove a bit more worrisome for the market. If we just see consistent sell side pressure, it could impact the price in a negative way. But especially if you see this sort of isolated or relatively isolated spikes in exchange inflow during a downtrend, I think it's an interesting, somewhat risky, but an interesting time to maybe consider entering a particular position, right? So outside of just spikes in exchange inflow, we've seen a lot of coins, some of DeFi's most popular coins, record a bunch of spikes in age consumed as well near or during the recent market pullback, implying once again that a lot of long-term holders are starting to move their bags again. This is Maker with a string of age consumed spikes near the local bottom. This is REN once again, Uni with a massive spike before we started to bounce back, and then IFI as well with relatively strong spike, pointing to the fact that IFI's long holders were on the move again. So in a word, we have seen quite a lot of panic sell-offs in the past couple of days. And when you combine this with the increasingly bearish sentiment towards Bitcoin, which Brian has shown a minute ago, in terms of our social data, it does point to the fact that there is a rising level of concern in the market. Whether this is good or not is, we can really only, base our analysis on market sentiment. We also need to look at a variety of different fundamentals, but at least it points to the fact that, nobody thinks anymore that we're just going to breeze through 20K like they thought maybe 2 weeks ago or 3 weeks ago. I think a good way to showcase this is you go to sand trends. I think one of our writers mentioned this a couple of days ago in their insight. You type in 20K and you will see the amount of 20K mentions on crypto social media over the last 6 months. So this is when we peaked. This was November 30th, right? When Bitcoin, this wasn't the first time that Bitcoin passed 19K. It was on November 25th. After a market-wide pullback, this is when bullish sentiment reached its high. There was a lot of talk about breaking through 20K and moving onward. If you look at all-time high, ETH, you'll see a very similar, but you'll see two spikes, I think. Yeah, you'll see a spike here, and you'll see this spike here. So you can kind of see how extremely bullish sentiment, or conversations about FOMO, Lambos, and general all-time high sentiment tends to coincide with local tops. Since then, there has definitely been a trend reversal in terms of market-wide sentiment. Both investor sentiment and crowd sentiment has been declining fairly rapidly. This is good from a market health perspective. You do need to see some amount of investor fear and investor and market pain in order for us to have a sustained price rally. Not all of Bitcoin and Ethereum's fundamentals are pointing to a market-wide bounce back just yet, but at least it's good to know that we are not all just throwing Lambos and moods at each other at this point, right? So keep an eye on these metrics like MVRV and exchange inflow that Brian and I have shown today. And be sure to check out this insight to kind of see that this wasn't an isolated case and that there is, in fact, a lot of panic in the market, or has been a lot of panic in the market over the last couple of days. Something to keep an eye on. All right. With that in mind, let's check out if there's anybody, any other coins that people want us to look into. Okay, so there's a few different REN requests. So let's check out REN, and then anybody else or any other coins, guys, that you want us to look into, just let us know in the comments, and we'll get to them, after we look at REN. All right. So speaking of REN, quite an interesting sort of price action for one of my probably favorite DeFi coins. Let's check out some of the more, general network health metrics for REN in particular. So this is REN's daily active addresses, pointing to the amount of on-chain activity, or the amount of unique addresses interacting with the REN protocol or the REN network, sending or receiving REN tokens on a daily basis. So in general, I think we're fine, right? There, ideally, what I would like to see happen with REN's daily active addresses in the next couple of days, which it probably won't happen because we're going into the weekend, and notoriously, especially if you look at like Bitcoin and Ethereum's daily active addresses, like for example, let me show you. I think it's best seen on Bitcoin. Yeah, so these zigzags and these sort of dips every now and then, it's just a weekend, right? So really, if it wasn't for the weekend, you would see sort of just a straight line in terms of Bitcoin's on-chain activity or daily active addresses. So with that in mind, I would be very surprised if we saw a bounce in REN's daily active addresses in the next couple of days. But that's what I would like to see. Because like Brian mentioned at the start of this call, we very often see, and I think we covered it once before already, for REN in particular, where we covered there was a relatively strong uptick in REN's daily active addresses while its price was declining rapidly, pointing to an overall undervalued conditions in terms of the price action of the REN token compared to the amount of value being transferred on the REN network. Let me see if I can find that in, by the way. Yeah, here we go. Okay, so we wrote this about maybe 2.5 months ago. It was around the time that REN was approaching sort of key bounce back levels, and this was our sort of estimation at the time, that we think REN is probably going to bounce back in the short term, and it did. So once again, let me show you exactly when this was, so you can see the price action of REN after the fact. So we wrote it here, that REN was approaching key bounce back levels, and this is what happened afterwards. So some of the things that we noted in this insight was the daily active addresses were high, and we have seen sort of a spike in its on-chain activity. It was relatively low, right? I mean, it wasn't super pronounced, but it's still showing, given that the price is trending downwards, the fact that daily active addresses are on the rise is usually an interesting signal to take a look in. There's a few other sort of bottom markers that we have pointed to here in case of Ren. Number one is that, like I just mentioned a minute ago, there was a lot of panic selling at the bottom. So this was 2 months ago. You can see it's basically the same thing like I wrote a day ago, where we've seen these sort of panic selling markers at local bottom. So for Ren, this is what happened here. A little bit of panic in terms of daily active deposits. This is the amount of addresses that are moving Ren to exchanges. So after sort of a 2-month decline, late September, they started rising again. So there was, people were concerned about Ren's short-term potential. And then there was a spike in the supply on exchanges, once again pointing to panic sell-offs. We have seen this before with Ren here in early September before a bounce back. Once again, panic sell-offs in the short term aren't necessarily the worst thing to happen for a coin. And similarly, we have seen a sort of massive dip in Ren's MVRV, entering this sort of bounce back territory. So I'm going to look into Ren's MVRV now as well, just to see where we are in terms of its sort of indication of Ren's market potential. But for now, Ren's daily active addresses are remaining fairly okay. 600, 700, about 700. I would like to see a stronger push into maybe, let's say, 800, 900 range. So just something to let me know that more people are now moving into Ren. Now that Ren is dumping fairly significantly, which would point to increased speculative demand in the coin, right? Now let's check out what Ren's exchange data is telling us. Okay, so this is the sort of exchange inflow spike that I was pointing to before this sort of bounce back here. So it was definitely a sort of a short-term spike in exchange inflow, pointing to relatively panicked audience of Ren investors looking to sell their coins. However, in general, Ren's exchange activity has remained relatively low. So this is the amount of the Ren deposits. So since the November top here, the 25th November top, when we peaked at about 88 daily deposits, the amount of addresses moving Ren to exchanges has remained fairly low. So overall, it doesn't seem like Ren's investors are super concerned about its short-term potential. Like we pointed out here, where was it? Yeah, we would like to see a little bit of panic, a little bit of people not being too bullish or too confident about any coin's market potential. At the moment, at least, it seems like even if you include the spike in Ren's exchange inflow, it has since normalized. So for now, people are sticking to their bags, which, at least in the short term, isn't necessarily the greatest thing that you want to see, right? Okay, let's look at age consumed. Let's see if Ren's long-term holders are doing anything interesting. No, not really. So since the spike in exchange in age consumed here, which pointed to a substantial amount of previously idle Ren coins moving, in the last 3 days, Ren's long-term holders have not done pretty much anything with their coins. They have been sitting patiently on their bags. It seems like Ren holders overall are looking fairly confident that we're going to bounce back. Now, very interesting or very important to me is to look at where we are in terms of MVRV. MVRV, once again, is the relative unrealized profits of Ren's long and short-term traders. So I'm going to look at short-term traders as well, first. This is the 30-day MVRV. We are currently at minus 18%. So on average, all addresses that have acquired Ren in the past 30 days are now minus 18% on their initial investment. If you look at Ren's sort of previous MVRV bottoms, let's look at all time. So this seems to be the line that is usually like a super undervalued territory, right? So we can maybe say between here, here and maybe here. So this is what I would consider fairly undervalued or super undervalued. We're not there yet, right? We can definitely dump higher than or dump lower than we are at the moment before we enter a properly undervalued territory according to Ren's historical trends, right? Even if I like push it out here a bit just so we catch a few at the bottoms as well here. Probably we want to see Ren Rand's MVRV, short-term MVRV, go below 20%, so between 20 and 40, minus 20 and minus 40%, is when, on average, Rand's MVRV has 30-day MVRV tends to bottom out, and we can see a strong potential for a short-term bounce. So this is as far as Rand's short-term MVRV is concerned. At the moment, its traders are still in a lot of pain. At least it's swing traders, minus 14%. Or sorry, was it 18%? I think. Yeah, minus 18% is nothing to scoff at. They're definitely in a fair amount of market-wide fear and uncertainty about their bags. So at this point, I think anybody that has wanted to get out of Rand has already got out. So there's going to be, at least in terms of this particular group of holders, there's going to be a relatively low sell side pressure, and this is what we saw. We didn't really see a whole lot of Rand being moved to exchanges in the past couple of days. So this is, on the other hand, let's look at Rand's 365-day MVRV. So the long-term Rand holders are currently at about plus 5% on their initial investment. At the moment, in other words, long-term Rand holders are still up on their initial investment, pointing to the fact that we're not still in an undervalued territory as far as Rand's long-term MVRV is concerned. So if you look at here, we can definitely dip much lower, up to minus 50%. So Rand's local MVRV, or sort of 365-day MVRV bottoms are, let me zoom in a bit just so we can see it. So maybe, oh, no. Wait. Okay, let's say this is the line that we are looking into. So about minus, where we are? Minus 50%. At the moment, we haven't even reached the break-even territory. So while Rand's short-term holders are in a lot of pain, Rand's long-term holders are still in profit. They could, if they're so inclined, they could start to sell their bags at this point in time, and impact the price negatively still. Like I said, as far as MVRV is concerned, if we see both long and short-term MVRV drop below zero, and especially if it reaches or starts to reach these historically low MVRV levels, it's a pretty interesting time to accumulate, or it has been in the past at least. So for now, I would say Rand's on-chain data is looking kind of in the middle of the road. So daily active addresses are staying flat or plateauing compared to what's previously been happening. I would like to see a bounce back or a surge in Rand's on-chain activity as we dip lower and lower. So basically keep an eye on this metric. I would like to see this particular uptick go even up to here, maybe, pointing to the fact that we are seeing a lot more engagement with the Rand network. Basically, we're seeing some influx of potential buy pressure, right? And in other metrics, keep an eye on daily deposits and exchange inflow as well, just to make sure that Rand sell side pressure is not increasing too much. That we do want to see a little bit of investor fear and investor pain, but at the same time, if we see a consistent spike in exchange inflow, it could take the price even lower. Now, what I wanted to show, and I don't think that we showed this last week, is the distribution of Bitcoin on Ethereum, and in particular Rand BTC here. So this is interesting, and I was talking to a few people why this might be. So if anybody in chat has ideas of why this could be the case, let me know. But we have seen a fairly strong decline in the last month and a half in terms of tokenized Bitcoin on Ethereum, in terms of Rand BTC on Ethereum. So it seems like, for whatever reason, users that have tokenized their Bitcoin on through the Rand VM are now kind of moving away from the protocol. I'm not sure exactly what this points to. It could be that there are other tokenized Bitcoin solutions that are currently more trendy. It could be that people have been moving into wrapped Bitcoin because it usually provides more yield farming alternatives or yield farming options. However, wrapped Bitcoin has also declined in the past couple of weeks as well. Not by, not as much as the Rand BTC, which has, I think we've lost about 10,000 Rand BTC in the last month and a half. As far as wrapped Bitcoin is concerned, it's a bit lower decline, but still we're seeing the amount of interaction with the REN BTC start to decline. Not exactly sure why this is. I was trying to look into particular or possible explanations to this. If you are super high on Bitcoin, this might be the case, right? To me, this is the premise that I'm currently going with. If you're bullish on Bitcoin, you probably want to wrap it into a particular through whatever means you want, whether it's Rep BTC, REN, SBTC, whatever. You want to put it in a tokenized form and then put it on a particular DeFi protocol, so that not only does your Bitcoin inflate in value, but you also yield, you also farm some yields along the way, right? However, we are not really seeing that with REN BTC in particular in the last couple of weeks and even a month or so. It seems like for whatever reason, it's not super interesting to people or to Bitcoin investors at the moment. We've seen a massive rise since it launched. At, I think May 27th was it, up until October 21st. Since then, quite a big dip. So if you have any explanations why, could they be cashing in their BTC for fiat? This is my current explanation, Fields. Because like I said, if you are bullish on Bitcoin, I don't see a reason why you wouldn't tokenize it, whether it's in REN BTC or WBTC form, and just put it in a DeFi protocol and just have it, park it there so that it not only inflates in value, but you also farm yield at the same time. So I think this could point to a general uncertainty among Bitcoin holders. Maybe they're even withdrawing it from DeFi protocols and starting to cash out in exchange for fiat or other stable coins, just kind of sitting on the sidelines for the moment. So that's something that I wanted to point out as far as Bitcoin's concerned. Now, Brian, I've seen somebody mention XRP. I know you had a few points about XRP that you wanted to cover on this today's call. So if you want to jump into that, I can stop sharing my screen and you can jump in.
Yeah, you bet. I'll gladly show off a couple things I've seen. All right. So as you guys know, later today, I think about 11 hours from now, it's going to be, no, less than that. It's going to be 5 p.m. Pacific time. So about 9 hours from now, we're going to have an airdrop for Ripple. And it's it seems to be an event that many people are quite optimistic on. The big variable is how much the airdrop token, known as Spark, is actually going to be worth. Everyone who has Ripple on a certain exchange, such as Coinbase or other wallets, which I don't know enough information on to give examples of, but anyone who has coins, Ripple coins in those wallets at the time an airdrop occurs, or a snapshot as they call it, that's when they get an airdrop of these Spark tokens on a one-to-one basis. With that in mind, the behavior of Ripple has changed quite a bit for holders. We can see there was a massive price jump in around the 19th or 20th. We went from 32 cents all the way up to 69 cents. So more than a 2x in just these couple days here. And it looked like it was pretty spurned by what was happening with the whales. We see that the red line here is anyone with more than 10 million Ripple, which is roughly right now, I think a little less, around 5.5 million or above. That's a lot of tokens in those addresses. So anyone with currently 5.5 million or above, we're seeing this red line moving up. It recently just had a drop as of yesterday, but I reported yesterday when it reached an all-time high of 338 addresses that had this amount of tokens in their addresses. And over time, this trend has been going up and up, which is really good news for Ripple bulls. We can see here, conversely, we had a big drop off in addresses with 10,000 to 10 million tokens. So I believe, if I'm doing the math correctly, that would be 5.5 thousand to 5.5 million in those accounts. So kind of the semi whales, I wouldn't even call them whales, I would just call them kind of the mid-range traders. There was a massive drop off between December 4th and today. So interestingly, those addresses have been dropping off, but those addresses with the most at stake are continuing to rise. And of course, the tan line are the lowest tier, and they always seem to continue to rise as more and more addresses are created. But I think with the red line encouragingly continuing to rise, or at least sort of plateauing here right up to the airdrop, it's a promising sign that this airdrop could actually be a bullish event and something to take advantage of. I definitely don't want to give off the impression this is investment advice, because this is only one of many metrics here, but it looks like those with the most at stake seem to be optimistic, and that's why there are more and more of these types of addresses being created. The other thing I want to show is daily active address activity. I'm actually just going to show the daily version instead of the 24-hour version. Also going to get rid of this and this and this and make that full screen. So this is the last year of daily active address activity. I want to get rid of these massive bars that showed up here that kind of skew the axes. So I'm going to go to the last 6 months, and now that looks much better. So this tells quite a story, guys. The orange bars here are the amount of addresses interacting on the network on a daily basis. As we can see, we really had a rocket launch on this metric around the 20th, and we hit a peak of about 41.5K back on the 23rd, just about, give or take, 2.5 weeks ago. But even after dropping off, look how high the daily active addresses have stayed here. And this is great to see, because it's showing that there's kind of a sustained effort by the Ripple community to keep lots and lots of different addresses interacting and transacting on a daily basis. And this is one of the prime metrics we try to look at to give an indication that the network is being used and having utility. So right now, as of yesterday, or this was actually 2 days ago, excuse me, because we only have full days on here. So this was up until yesterday. 2 days ago, we had our second highest in the last 6 months in terms of daily active addresses transacting on the network. And it looks like this is very much related to the snapshot. I wouldn't be surprised if today ends up being a very, very large bar. We'll have to wait. I'll likely report on that on Twitter. But I think based on this, the snapshot looks like a good thing for traders. Whether the price drops off immediately after or right before, who knows? And the value of Spark token is going to be completely unknown. But all things in a vacuum, when we see this kind of huge jump in daily active addresses, especially for a long period of time, over 3 weeks now, it's a good thing to see, and tells us that the asset is healthy and the price is justified being way, way higher than it was just a month ago. So great to see there. I'll also quickly just show the social volume, and then we got to wrap it up. Let me also change this to an area. Full screen that. Okay, yeah, so social volume. I believe this is right around the time when the hype of the Spark token airdrop hit its peak before dropping off. There isn't quite as much social volume as I would expect, because daily active addresses, there's an even bigger difference between last month and now. But social volume wise, there still seems to be discussion, and I can almost guarantee that there's going to be an uptick here in the final 8 to 9 hours of this before this airdrop happens, as people try to communicate with each other that it's happening. We'll likely see some volatility in price. I definitely am not going to imply that the price is going to jump up prior to it. It could actually do the opposite, but you will continue to see these big movements, in my opinion, because of the fact that this is a polarizing event that's going to cause a lot of discussion as to whether it's really exciting or whether it's completely useless. And the community ends up, deciding and almost self-fulfilling that in a lot of cases. All right, so that's going to do it with Ripple. and that's probably going to do it for our entire call. Dino, do you have anything else you want to add?
Oh, can you hear me, by the way?
I can hear you now.
Okay, cool. Yeah, so I see Matthias asking about Hex. I don't know if we have time to get into it deep, but I will just point to something that I've seen for Hex a couple of weeks ago. So Matthias, you probably know this better than me. I'm not very deep in Hex. I don't really track what's been going on with the project, but I've seen this massive spikes, and I was looking into why they were happening, especially spikes in daily active deposits and exchange inflow. By the way, I'm not, going to get into whether Hex is, an MLM, a scam, or not, whatnot. I'm just going to look at its on-chain activity here. So there's been a fairly massive spike in both its deposits and exchange inflow. This is, I think, a day after, or like at exactly the time when we saw this massive payday. I think it was called like big payday or something, where about 90% of Hex supply, I think, was just given to the community or something like that. Wasn't that the case, Matthias? And at this point in time, we saw that a lot of people started catching out of Hex. Since then, the general trend hasn't actually been that bad. I would have expected, this sort of sell-offs to remain for a while, since the quote-unquote big payday. But in fact, not a whole lot of people have been selling since. There seems to have been anybody that wanted to sell Hex did it after they received their coins, and since then it's kind of normalized back to its previous levels. I will say, say what you want about Hex, its daily activity is still fairly high. 920 addresses on a daily basis puts it, easily into, I think, top 20 ERC20 coins by on-chain activity. I mean, I can even look at it real quick for you, Matthias, my screener. So this is something that I like to use quite a lot. So check out, I have a few filters here already established. So market cap of all coins, let's look at all coins above $1 million. Let's look at all of the coins in the Ethereum market segment, so basically ERC20 coins, and daily active addresses with more than 900 active daily addresses in the last day, let's say. So let's see how many assets actually have those types of characteristics, and whether Hex is in it. Oh, it doesn't seem that it's in. So maybe 800 daily active addresses. Just want to see where Hex lands. Are we here? No. Okay, 700. I thought Hex had a bit higher daily on-chain activity. Let's see where you are, Hex. Here you are. Okay, so it's more than 700 daily active addresses on average. So this puts it in the top 23 assets in terms of at least the amount of addresses interacting with the network. Now, like I said, I haven't really looked into the tokenomics a whole lot. I don't know. There could be, these types of metrics. If you really want to skew it, you could skew it on a daily basis. It would take quite a bit of time and quite a bit of effort to mimic more than 1,000, daily active addresses interacting with the protocol on a daily basis. And it's obviously been in a fairly, strong decline since. So I'm gonna assume this was all because of the big payday. So since the 3,000, we peaked at about 3,000 daily active addresses. We're now below 950, 930. So it's kind of declined by about 200% in the last 2 months, but still it remains fairly high. So yeah, Matthias, if you're interested in more sort of Hex talk, just join our Discord, and that's going to be, I think, the call to action for all of you guys. If you're interested in this data and don't want to wait until next week, we talk about coins and metrics on a daily basis in our Discord server. So check it out, and please, if you did enjoy this video, make sure to like and subscribe to our channel, because it lets YouTube know that we're providing good stuff here, and that you should kind of let more people know. And it also lets us know that you enjoy this content and would like to see more of it. So I think that's going to be it for us today, guys. Check out app.santiment.net. There's a 2-week trial if you haven't already tried it. And then if you're happy with the metrics, it's just $49 a month moving onward. However, we do have I think an ongoing discount code for everybody that is watching these weekly streams. So if you at checkout type in TWIC, meaning This Week in Crypto, you will receive 25% off on your first billing cycle, whether that's a monthly or a yearly plan. So even more, incentive to try out our metrics and see what you find. All right, Brian, that's gonna be it for now. I think. I guess talk to you all guys in 7 days.
Yep, good deal. Thank you, Dino, and thank you everyone for joining. Have a great weekend.
All right, see you guys. Stop.